Welcome learners. This week we will learn another important topic which is given under Income Tax Act 1961, that is clubbing of income, that is income of other persons which are included in assessee's total income. The Income Tax Act says that a person is liable to pay income tax on the income of his or her own income. But can it happen that somebody else is earning the income and the income tax is making another person liable for such income? Yes, it is possible, and these are dealt in section 60 to section 65 of the Income Tax Act. That is clubbing of income, that is income of one person is taxable by another person. Now, what are the situations in which such things can happen? And that is learners, you should also note it very minutely, because the clubbing provisions can be attracted if a person is unaware of the fact. Number 1, section 60, transfer of income without transfer of asset. That is, if any person transfers the income from any asset without transferring the asset, the property or the title of the asset itself, such income is to be included in the total income of the transferor. In that case, such kind of transfers will not be valid. Secondly, section 61, that is income arising from revocable transfer of asset. That is, any income arising to any person by virtue of a revocable transfer of asset is to be included in the total income of the transferor. Now, what is revocable transfer? That is, the transfer can be revoked at the option of the transferor. So, such kind of transfers will not be taken as valid transfer in the eye of income tax, and income arising from revocable transfer will be included in the total income of the transferor by section 61 of the Income Tax Act. Section 64 subsection 1 clause 2, that is income by way of remuneration from a concern in which the individual has substantial interest. That is, in computing the total income of any individual, all such income which arises directly or indirectly to the spouse of such individual by way of salary, commission, fees, or any other form of remuneration, whether in cash or in kind, from a concern in which such individual has a substantial interest shall be included. Substantial interest refers to holding of at least 20% of the voting right. Section 64 subsection 1 clause 4, that is income arising to the spouse from an asset transferred without adequate consideration. Where there is a transfer of an asset other than house property, directly or indirectly from one spouse to another, otherwise than for adequate consideration or in connection with an agreement to live apart, any income arising from or any income arising to the transferee from the transferred asset, either directly or indirectly, shall be included in the total income of the transferor. Similarly, section 64 subsection 1 clause 7 says transfer of assets for the benefit of spouse. All income arising directly or indirectly to any person or association of persons from assets transferred directly or indirectly without adequate consideration is includable in the income of the transferor to the extent such income is used by the transferee for the immediate or deferred benefit of transferor's spouse. Income arising to son's wife from the assets transferred without consideration by the father-in-law or mother-in-law. It is under section 64, subsection 1, clause 6, where an asset is transferred directly or indirectly by an individual to his or her son's wife without adequate consideration. The income from such asset is to be included in the total income of the transferor. Transfer of assets for the benefit of son's wife. All income arising directly or indirectly to any person or association of persons from the assets transferred directly or indirectly without adequate consideration will be included in the total income of the transferor to the extent such income is used by the transferee for the immediate or deferred benefit of transferor son's wife. So, these are the cases where a person should be very cautious of dealing with such situations, because the clubbing section of 64 subsection 1 will be very active, and the income, even though it is transferred to some other persons, will be clubbed with the transferor's income. Now, important aspect is minor, income earned by minor, that is clubbing of minor's income, which is also given under section 64 subsection 1 capital A. All income of a minor is to be included in the income of his her parent. However, the income derived by the minor for manual work or from any activity involving his or her skill, talent or specialized knowledge or experience will not be included in the income of his her parent. The income of the minor will be included in the income of that parent whose income is greater. Once clubbing minor's income is done with that of one parent, it will continue to be clubbed with that parent only in subsequent years. The assessing officer may, however, club the minor's income with that of the other parent if, after giving the other parents an opportunity to be heard, he is satisfied that it is necessary to do so. While we discussed section 10 subsection 32, we had seen an exemption in respect of clubbed income of minor. In case the income of an individual, that is parent, includes the income of his her minor child, such parent shall be entitled to an exemption of rupees 1,500 in respect of each minor child. However, if the income of any minor so includable is less than rupees 1,500, then the entire income is exempted. There is some instances of cross transfers, that is, in case of cross transfers also. For example, Mr. A is making gift of rupees 50,000 to the wife of his brother Mr. B for the purchase of a house by her, and simultaneous gift by Mr. B to A's minor son of shares in a foreign company worth rupees 50,000 owned by him. This is an example. So, the income of the asset transferred would be assessed in the hands of the deemed transferor if the transfers are so intimately connected as to form part of a single transaction, and each transfer constitutes consideration for the other by being mutual or otherwise. So, be cautious about cross transfers also. Section 64 subsection 2 deals with conversion of self acquired property into the property of Hindu undivided family. In this case also, the attraction of clubbing provisions will be there. The income includes loss. It is significant to note that as per explanation 2 to the section 64, income would also include loss. Accordingly, where the specified income to be included in the total income of the individual is a loss, such loss will be taken into account while computing the total income of the individual. It is significant to note that this explanation applies to clubbing provisions under both section 64 subsection 1 as well as 64 subsection 2. So learners, in this week we have learned a very important aspect and an interesting aspect of clubbing of income, that is income of other persons computed in calculating total income of the assessee. Normally it does not happen in normal circumstances because the Income Tax Act says that the assessee is liable to pay tax on his or her own income. But there are certain situations which are explained under section 60 to section 64 where the situations arise that the income of other persons will be clubbed into the assessee's total income. So we have seen all such situations and have learned that these are the occasions where the income of some other persons will be taken into the computation of total income of the assessee. Thank you very much.